And we are live. This is Travis from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. This is another episode 276 of Trade with Travis. It's starting a little bit earlier this morning. I have a couple of things that I have to be able to do overall this morning when it comes down to classes and all other stuff. So I wanted to make sure that I end up putting out a video now, being able to take a look at what's going on with the overall trading opportunities and kind of going from there. So let's go ahead and get started. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. And understand that trading involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you end up making money today. So, with that being said, as I am sending out links to everyone, so everyone can be able to get the links if they want to be able to take a look at it online. Please let me know if you are live or whenever you're live. Let me know if my sound is good. Just want to make sure everything's good with that. I have a couple updates about a few of the things that is going through with. Um, well, just got a couple updates about a few other things that we ended up talking about that's going on in my arena, and kind of going from there. The Let's see, let's go ahead and go through the economic calendar, and then after that, I'll wait a couple minutes so I can be able to see if there's more people online. Then I go ahead and talk about what that news is. So yesterday, what ended up happening, we ended up having an interest rate decision. It ended up being 3.6 for the Australian dollar. We ended up having a New Zealand dollar interest rate decision. It ended up being 5.25%. Remember, the United States is at 5% now. We're looking at New Zealand's at 5%. Pretty much all of the um, most of the global economy is kind of getting up in those high figure numbers now. Australia is still low, Japan is still low, obviously China is still low, but most groups are getting pretty high so they can be able to recover the money that they end up giving out in 2020. Um, but as we go through, let me turn on my camera real quick. As we go through and take a look at what's going to end up happening today, remember the market has been slow when it came down to news overall, but this is our first fundamentals day of the month, where we're going to end up having something from Governor Lowe, which he's already done spoke. We have the interest rate decision, and then after that, we have ISM PMIs that's going to end up coming out a little bit later on today as well. So just want to make sure that everybody's aware about that as we go through and trade. And typically, this doesn't really move the market all of that much, but it will move it enough to where you have to be able to pay attention to it. So we'll go from there. Let's go ahead and get into the big three. United States dollar index is first. Um, as we take a look at what's happening with the United States dollar index, we'll go into the weekly, and then after that, we'll pop into the daily and kind of go from there. From a weekly standpoint, this market is still considered to be bearish. We take a look at what's happening from a stochastic. We're pretty much in a no trade zone, but the market has been pushing to the downside. Also, if you end up taking a look at this from a long term perspective, the market is getting very close to being able to tap this inner trend line, which is in dark purple, which is one of those areas where the market will test to see if the market is going to end up being truly bearish or we're going to see it pop up to the upside. Now, overall, for the last 4 weeks, the market has just been bearish overall. There's been some days where it's done popped up to the upside, but more importantly, the market just has been bearish overall. So we have to keep that in mind when it comes down to our overall movement. The question is, are we going to see that the market is going to start slowly starting to try to turn back around, or are we just going to see that this market is just going to remain to be bearish the whole time? But um, from a daily perspective, we can see that we're basically very close to the bottom of that support, and we've seen that yesterday that more people were starting to get into it and kind of hold the support. That ended up happening. We talked about how 12,620 could be a possible area of major support, but this is basically um, a breakout turned into a retest. It's done retest twice, so it's basically going to start being able to build out consolidation. The question is, going into today, are we going to end up having a solid push to the upside that's going to allow this market to keep on moving to the upside overall? Don't know what that's going to end up being. Well, obviously, we're going to take a look at it. That puts me in a position to where I know that the market is bearish overall from a weekly standpoint. We take a look at it from a daily standpoint. We're kind of in a area of um, indecision. So I'm going to stay away from the United States dollar, at least for the beginning of the morning. We'll kind of go from there. Oil, oil finally ended up having a pop in price. We ended up seeing that it popped up last week based off of the OPEC news. It ended up going from $75 a barrel all the way up to $80 a barrel. Currently, the market right now is at 80.50. There's a consolidation that we have been looking at since literally November of last year. where the market has been in between the range of 82.50 and $70 per barrel. When the market fell at $70 per barrel, remember we ended up taking that sell all the way down to $63 per barrel, and then after that, pop back inside. So we have been trading this one very actively this year. Don't know if we're going to end up trading it very actively until it ends up breaking out, but we will remain patient and kind of keeping our eyes out on that one. But oil overall still in consolidation. It really hasn't been that much great movement. We just have to pay attention to when the market actually ends up breaking out before making a move. Gold. Gold has been the benefactor of the market popping up to the upside. We talked about this yesterday where we end up having two options on what could happen off of this one. We end up saying that this market was going to end up falling down to support. If it fell down to support at 1951 and it popped back up, you had an opportunity of being able to get in because the market was in consolidation. Basically fell down inside this box, and there was a two-way go off of this one. Once the market ended up breaking past 1989, hopefully you end up getting into the trade based off a counter trend line break when the market ended up exploding out of this overall area. But now we are in a breakout position, but we do not have a retest as of yet. So if you did not catch it on the first counter trend line break that actually ended up happening right here, which I'm going to end up making in purple so everybody can be able to see it. You did not catch it right here. Then the next area would be, okay, well, let's hope and see how the market's going to end up reacting. Let's hope and see if the market's going to end up falling a little bit, turning this past support and a future past resistance into a future support somewhere around this overall area. And then after that, see if it's going to pop up to the upside based off of that. But the idea is still intact. Hopefully, you end up taking advantage of this overall move. Gold is back up to 2,000 per barrel or 2,000 an ounce. I do expect that we're going to see if this market's going to push back up to 2074, which is the overall high. They end up happening during the Russian-Ukraine war at the beginning, and then obviously right when the market really started making this push in early 2020, forced that overall movement. So we're there. It took a long time for us to be able to see this market make this movement, but it was not surprising that it did. Now it's just that I hope everybody took advantage of these moves as we're going through and kind of getting in and kind of making a play off of that one. But currently, right now, is there a move to be able to take? Currently, no. You would have. This one was a midday move yesterday that we ended up taking action on. Last one, let's take a look at Bitcoin. Let's see what's happening with that pair. And kind of go from there. Bitcoin is still underneath 29,000. Remember, once it breaks above 29,000, I think it's going to end up truly making its move and getting back up to where it was in form, possibly being able to push back up to the 60s at some point in time. But right now, we look at it, it's at 29,000. If it cracks 29,000, the next area where it's going to get up to is right around 40,000 for a overall move. But once again, that's going to come with some type of backing from people and some fear based off the United States dollar. Currently, right now, the market is still in consolidation. We take a look at this from a 2-hour perspective. We can see that the market is still clearly in consolidation and almost at a point to where this halfway point starts becoming very important when it comes down to movement. Here goes your halfway point right here. So 27,600 is starting to be a very important spot because we're seeing now that more buyers are starting to buy this up in this area. So right here, right there, it's starting to be maybe another consolidation inside of a consolidation. It's only one way to be able to find out. Obviously, if you want to be safe, take the trade outside of 29,000. You want to be safe when it comes down to sales, take the sale below 26.5. I don't think that the market's going to fall below there. So that means that you're looking at being able to buy right around 26.5. You're looking at being able to get in again above 29,000 as this market kind of makes this movement. Let's go into US 30. Will be nice if I do this. Okay. US 30 had a large push up to the upside, starting at the beginning of the week last week. And now we started to see that it started to come back in the form and being able to fall again. Let me explain what ended up happening. We'll take a look at it from an Ikimoku cloud standpoint, and then after that, we'll take a look at it from everything else. So from an Ikimoku cloud standpoint, market is market was bullish. We can see that this market kind of held up in this support, started to be able to push up once the market got into that 32,300 area, and then since then the market has been inside of this consolidation that it was in since November of last year. Now, taking a look and getting off of that chart and taking a look at the regular chart that we end up taking a look at, there's a D extension that ended up getting completed at 33,300 or 33,300. And now we're just going into another phase. We're just waiting for the market to be able to give us another fractal low so we can kind of build off of that. And fractal high so we can be able to build off of that. I remember saying that push come down to shove, but the market was truly ready to go when it came down to a push. A couple of days ago, we said that this market would hold off right around this area. We see that this is our last high volume node. We see that this pricing is basically inside of here. If this market falls, it's going to fall from 33,300 all the way down to 32,950. So it's a 400-point retracement at least when it comes down to movement. Now, we're looking at that based off of a 15-minute timer, and we can see that there's a major gap in between that overall area. So if the market does continue to fall, let's say United States dollar starts to get a little bit stronger, then I do expect that if this market does have a retracement, it's going to retrace at least 400 points. The question is, how fast is it going to end up doing it? When it comes down to that, I do expect that it will, but the question is how fast it will end up doing it. And will we have enough momentum for the market to be able to remain staying to the downside, at least until it ends up fulfilling this overall gap that we're taking a look at for what's high volume nodes. I like the thought process of being able to make a trade like this. I don't think I would probably look at being able to go with a 3 or 5% of my account type of trade, but a 1% trade off of this with the counter trend line break, with the gap of being able to know that there's unfair market prices right there. I do like the idea of being able to see that happen. Now the question would be, is it time to be able to actually make the trade right now, or should we wait? And I would kind of lean to saying, let's be a little bit more patient based off of this movement. There's no defined support yet. We just know that when we're looking at pricing, that 33,300, which was that the extension, is the next area where I think that this market would continue to start being able to show signs that the market would fall. Okay, so I'm going to put this in red as an area, but if I'm looking at selling, I would not look at selling until the market either rejected off of 33,600 again, and then started to push to the downside. If the market continues to be bearish, or if the market breaks below 33,300 and closes below that. Once it closes below and kind of gives you a little bit of a push like that, there goes your movement from here. Easiest trade will be to 33,150, which would be 150 points. I think that'll be an easy trade. The one that I think will probably end up completing with being all the way down to 32,950. So there goes a idea right there. Now stop loss will be above the swing high. The swing high in this case will be at 33,400. So you're risking about 85 points. You possibly can be able to go a little bit higher. Let's say if you want to go 120 points, put it at 33,440 as a stop loss. That'll be a 1 to 3 risk reward ratio. I do like the risk reward when it comes down to that. The question is, are we going to get enough momentum to see it fall if that does happen? Okay. So that is the game plan when it comes down to that movement. We'll continue to keep on looking at that one, but I won't pull the trigger yet. But I am going to end up seeing if this market stays below, we have a good chance of being able to jump into that movement. Okay. Now it's 100. Going to end off on this one. So Nas 100 last week, we ended up talking about the movement that it could make. Talked about this one was going to end up giving us the best chance of being able to make points last week or make profit last week. And that truly ended up being the case. Market ended up running outside of this consolidation right here. And we said that we wanted to get out right around 13,050. Market definitely ended up giving us enough room to be able to do that last week. Broke above this overall consolidation, then after that started to be able to push up, gave us one more chance to be able to get in before it roared up to the upside. Currently, right now, we're building out another consolidation. We can see that high volume nodes is actually starting to kind of push inside of that area. Now, if we take a look at this from a long standing standpoint, kind of look at it from a 4 hour perspective, we're still in a area of low volume. Or lower volume. I'm not going to say the lowest volume, but lower volume. So I do believe that the market will continue to keep on trying to push up. I think this is the heaviest area when it came down to that spot. Remember, we was going after this gap right here, space um, from that first initial trade. I wouldn't feel comfortable being given a buy again until the market broke above 13,330. And then after that, we'll look at being able to take it to the D extension. But currently, right now, no move on Nas 100. Okay. Um, excuse me. Excuse me. Sorry about that. So, just a quick review. As people are watching online, United States Dollar Index not ready to go yet. We're looking for that movement. I expect for the movement to be. Um, I expect for some idea of movement probably to happen a little bit today. Nothing probably tomorrow, and then after that, definitely something on Friday because we have non-farm payroll. We can see that the market is basically pushing back up inside of consolidation when it comes down to this movement up here at 12,700, at 12,770. The market pops up inside of this area, then it's going to go back up, possibly back up to 12,960, all the way up to 13,000 for that overall movement. Um, if that continues, the market continues to stay on this path or stay inside of this consolidation area. Now, oil was still not there. Gold, the market has pushed up past 2,000. The market ended up completing the extension last week. There's no movement to be able to take off of that one. US 30, we have a trade that could possibly happen to the downside for selling NAS 100. We do not have anything at all to be able to take. And all of those, when I talk about ideas, those are more scalping opportunities. I mean, not some of them are scalping opportunities, but on this one's mainly a scalping slash swing trader mindset. But I feel more confident in being able to say that the Dow Jones could fall down solely because it looks like the United States dollar may end up having a push up today. So it would not surprise me if this market continues to fall on its path and give you an opportunity to at least complete this overall movement that we end up talking about, the 32,950 as a sale. The question is it ready yet? From a 4 hour perspective, it's in a buy zone, so that would say no. From a 2 hour perspective, the market is in a buy zone. That would tell me no, at least not yet. But once it gives this opportunity, then after that, you need to keep your head up and be ready to go for that overall trade. That's the only trade that I will look at being able to pay attention to over the course of the next couple of days from a index perspective. You like what I end up doing, please make sure that you end up clicking on that and clicking on that boost button. Also, please make sure that you end up subscribing to the Trading View, the YouTube page, and obviously the Expert Advisor review page. I promise you that we're going to end up having a video for Expert Advisor reviews in the near future as we go through and put everything else up when it comes down to that. Also, when it comes down to these systems, we are finishing up the artificial intelligence portion of it. So we've been testing it over the course of the last week. I am excited to be able to say that I have it. The thing is now, we just got to make sure that the forecast numbers are right. And if that continues to remain to be the case, then I think we'll be good to go. Like always, make sure that you end up planning your trade your plan. I see each and every one of y'all in the next video. Take it easy.